All right, let's talk about SBI Life. As one of India's biggest insurers, their numbers are always worth a look. And their latest quarterly report is out. And honestly, it's a bit of a head-scratcher. We're going to break down how a company can have absolutely massive growth, but at the same time face some serious pressures. So, let's get right into it.
Okay, boom. The first number that just jumps off the page is this one. A staggering 46% jump in year-over-year revenue. That is a huge surge by any measure. But hang on, because that massive number, well, it's just the beginning of a much more complicated story.
And that leads us to the central puzzle we're going to solve today. I mean, with revenues shooting through the roof like that, you'd think profits would be right there with them, right? Well, not exactly. And this strange gap between income and profit is what makes this report so fascinating. So let's dig into that incredible revenue figure first. For the third quarter of fiscal year 2026, SBI Life's total income just exploded to almost 38,710 crore rupees. That's a 45.7% climb compared to the same time last year. So what on earth is fueling this fire? Well, this wasn't just a one-trick pony. It was really a combination of a few key things firing on all cylinders. They had some really solid gains from their investments, a strong and steady stream of premium income from customers, and the market in general was moving in their favor. It was basically a perfect storm of positive factors boosting their bottom line.
Okay, now let's switch gears and talk about profit, because this is where the story takes a really sharp turn. You know, while the revenue party was going full blast, the profits, they were telling a much quieter story.
And you can see the disconnect right here, clear as day. Revenue growth, a massive 45.7%. Net profit growth, just 5.1%. The actual profit came in at around 320 crore rupees. I mean, yeah, it's positive, which is good, but it's just a tiny fraction of that huge revenue jump.
And get this, to add another wrinkle to the puzzle, profits didn't just grow slowly year over year. They actually dropped from the previous quarter. They went from 380 crores in Q2 down to that 320 crore number in Q3. So the business is growing like a weed, but profitability is really feeling the squeeze. The big question is, why? Okay, let's follow the money and try to make sense of this. Think about it like this. Imagine you run a food truck and you have a record sales day. The cash register is just overflowing. But what if the cost of your ingredients, the flour, the cheese, everything, also skyrocketed on that same day? Well, the money you take home at the end of the day might not look all that different. That's pretty much what happened here.
And this table really tells the story. You can see that total income took a huge leap from last year. But look at the total expenses. They shot up almost in lockstep. That means the gap between what came in and what went out, the profit margin, got squeezed down to be razor thin.
So what pushed those expenses so high? Well, the sources point to a few key culprits. First off, they had to pay out more money on existing policies and also put more cash aside for future claims. Then, you have these really complex calculations about future risk. They're called actuarial adjustments, and those increase costs. And finally, the financial markets have been pretty volatile, and that makes the company's long-term promises more expensive to keep. And that's all on top of the usual costs of just running a rapidly growing business.
But here's the thing. You really can't judge a massive company like an insurer on just one quarter's profit. They're playing the long game, thinking in terms of decades. So we need to zoom out a bit and look at the fundamental strength of the business.
So first up, let's quickly define AUM, or Assets Under Management. Simply put, this is the total value of all the money that the company is managing for its policyholders. It's a huge indicator of their scale and how much trust people have in them. And when we talk about SBI Life's AUM, wow, we are talking about 5.1 trillion rupees. And it's not just a big number, it's a growing number, up 16% from last year. This really shows that even with a profit squeeze in one quarter, the core business of collecting and managing people's money is incredibly strong.
Next up is the solvency ratio. Now this one is a super important health check for any insurance company. It basically answers one simple question. If something really bad happens, does the company have enough cash on hand to pay all its claims? The higher the number, the safer the company is.
So the regulator says a company needs a ratio of at least 1.50. And where's SBI Life? They're sitting comfortably way up at 1.91. They're not just clearing the bar, they are sailing over it with plenty of room to spare. This sends a really powerful signal that the company is financially rock solid. For a policyholder, it means that even if profits had a tough quarter, the company's ability to pay your claim even decades from now is completely secure. And finally, Let's check out their spot in the market. In the super competitive private insurance space, SBI Life is an absolute giant. They hold a dominant 25.6% market share. Think about that. 1 out of every 4 rupees of premium paid in the private sector goes straight to them. That is what you call leadership.
Now, full disclosure, because that's what we do in these explainers. When we were digging into the 9-month profit figures, we noticed something. Our 2 sources actually reported different numbers. One showed a small decline, the other a small increase. This kind of thing can happen, maybe due to different accounting standards or timing. We're not here to say which one is right, we're here to show you exactly what the sources are reporting.
So, after all that, after digging through the revenue, the profits, the AUM, the solvency, what's the big picture here? What's the real story we should be taking away from this quarter?
It really boils down to 3 key things. Number 1, the business itself is growing at an incredible clip. Revenue and premiums are way up. Number 2, short-term profit is definitely being squeezed by rising costs and a shaky market. And number 3, the company's long-term foundations, its assets, its capital, its market position, all of that remains rock solid.
And hey, don't just take my word for it. The company's CEO, Amit Chingran, basically confirmed it himself, saying that growth was volume-driven. In other words, they are selling a massive number of new policies, and that's always a great sign for long-term health.
So, that leaves us with this final thought. SBI Life is in this classic, fascinating business situation. They're juggling explosive growth on one hand and some serious profitability pressures on the other. The fundamentals look as strong as ever, but the environment is tricky. Watching how they manage this balancing act, well, that's going to be the key to understanding the next chapter in their story.